Steve Burns with Crawford Software. I want to take the time to thank you for joining us today in our continuing webinar series that we run every month. Today, I'm joined by Linda Ballard, one of Crawford Software's senior Epicor consultants. Linda's been working with the Epicor system and customers for over 17 years. Today, Linda's going to walk us through some helpful tips for a successful year-end in Epicor 10, 10.1 or 10.2, generally version 10. The goal of our monthly webinar series, for those who are joining for the first time, we see a lot of return customers coming back, so we certainly appreciate that. But the goal of our monthly webinar series is to provide customers with real insights that help them maximize the value of their Epicor system. These insights are learned from our team who've been working out in customer accounts for decades. And what we try to do is bring that insight to you to give you helpful insight, tips and tricks, sometimes they're called, to best use your Epicor system. Just a couple of housekeeping notes. If you'd like to ask Linda a question, you can either type it in the question box or in the chat window in your toolbar. So at this time, what I will do is turn the presentation over to Linda. And Linda, you can go ahead and give us some tips for a successful year-end close in Epicor 10. The presentation's coming over.
Thank you. And thank you, everyone, for signing up for this webinar today. It's my pleasure to present to you year-end processes. This is a high-level overview. It's not intended to get into the weeds or the nitty-gritty. And even though my first slide here says 10.1 year-end processes, it really applies to going forward to 10.2 or earlier versions all the way back to 9 and even below. Most of this would apply. So thank you for joining us today. As far as the agenda goes, we're going to discuss the 4 main business cycles just to kind of give you an overview of the different aspects of your ERP system, the recommended order of events, and some of the prerequisites. We'll kind of review a year-end accounting checklist. It's not all-inclusive, and then discuss a few of the common pitfalls. Again, there's any number of possibilities, but we'll try to hit some of the high notes on that. Epicor business cycles, as you well know, it's an ERP system fully integrated from production and inventory through to your sales, accounts receivable, your purchasing, POs, accounts payable, cutting your checks. And if you have the payroll module within Epicor or the fixed assets module, you would also want to take a look at that for your year-end closing. So we have the manufacturing and inventory side of our business. We start there and then work our way through, and we'll end up in the accounting side, our last stop being the general ledger, where all the transactions will end up posting. So the order of events, we want to make sure when we're in our 12th period of our fiscal year, which for the sake of this overview, we'll assume that it's December 31st. Of course, as you well know, your fiscal year could end the end of March, the end of June, anytime throughout the year. But just for the purposes of today's talk, we're going to say it's going to be December 31st. And we'll want to make sure that all the production activity has been completed So again, I'm starting on the manufacturing side of your business where you may have open jobs that need to be completed and closed. You have a capture cost of sales WIP program that happens so that we close out WIP into our cost of goods sold at the time of shipment, our movement of our goods into finished goods inventory. We'll print necessary reports and then do the reconciliations. And each step of the way, when I talk about reconciliations, I'm saying we want to reconcile with our general ledger accounts, namely the balance sheet accounts, with our subsidiary ledgers, and that takes the form of several different reports, like your stock status report, your inventory WIP reconciliation report, your AR aging, AP aging, your receive net invoice report is a very important report to reconcile with purchase orders that we've received on, but we haven't invoiced them yet, and there's a clearing account that needs to tie to. And then finally, we have our year-end, month-end transactions for the general ledger, and we'll talk about closing out the year, finalizing the year and closing the year. So let's take a quick peek at manufacturing and inventory. We want to make sure before we run the final capture cost of sales and WIP and post to the general ledger that all the purchase order receipts on things that we've had come in our back door have actually been entered into the Epicor system. A lot of times things may, if you're a large organization, sit on your back receiving dock, but somebody has not actually gone and entered it into your Epicor system. So it's very important that we get those receipts recorded, as well as on our accounts receivable side. Before we can get shipments as a process within your AR invoice process, you want to make sure that the shipments have been flagged as shipped. And as most of you know, you create your sales order, and then when you go to ship on that sales order, there is a checkbox that will be displayed that says this product has been shipped. Whether it's a complete shipment or a partial shipment, we want to invoice for the part that's been shipped in its entirety. And then, of course, a lot of you may use the MES system where you not only capture labor, but you also are using it to clock in and out of the system for your shop employees. You use the labor edit report to reconcile that and make sure that labor isn't showing 999 hours when it should show 9, things of that nature. If you don't use MES, then you're likely to be using the time and expense entry, and you want to make sure all that has been entered for the month of December in this case. And so we just want to make sure that we don't have any glaring errors and catch them and get them corrected before we actually post all this through the capture cost of sales WIP process. So as I said earlier, we want to verify that all the jobs that have been candidates for closing, in fact, have been completed first. Usually that would be somebody in operations or the manufacturing side of your business, shop lead, foreman. Make sure that all the jobs have been completed. And the closing of the jobs, the actual marking the jobs as closed, is usually taken care of by somebody in accounting. And I say this because it does impact the general ledger, and we want to make sure that they've been looked at, that we've compared the closed jobs to different subsidiary reports, and make sure everything looks like it's in order, and then we can go ahead and close the job. The inventory WIP reconciliation report is like the Bible to accountants, and it can be as well to the operations people. It is a tell-all of the detail that's going to post to your general ledger when you run the capture cost of sales and post activity. You can break it down to so many different ways, and I'm speaking of the WIP reconciliation report. You can run it by accounts, you can run it by transaction types, you can run it by a date range, you can run it by the entire month. If there's not a lot of data in there, you can run it for a couple of periods at a time. However, I don't recommend that. Hopefully you're running it once a week and checking it to make sure it's in balance, and that it's some of the accounts like the AP clearing account is tying to the receive not invoice report. Just checking for things that look odd are way out of line. I gave an example earlier of your labor could be just way too high. You want to use this report as frequently as you possibly can. If you run it for an entire period at once, it is going to be very long, and what a lot of customers do is they will print it to a file so that they have it, that they can look back on it. But to print 450 pages, as it can sometimes be if you run in its entirety, that's way too much to print off a printer. And once you've taken a really good look at this and you feel comfortable, then you can go ahead and run the capture cost of sales WIP process. You want to check the box to post to the general ledger. You want to go ahead and post the cost of sales manufacturing variance and capture outdated transactions. What you'll do is you'll enter the ending date as 12/31, in this case 2018, and that will push the starting date back to the last time it was run. In this case, it would be 12/1/2018. So you can run this more than once. So know that, it's not going to stop you from going back and running it again if you need to. You just need to be aware of what dates you're using. And you can even go back to prior periods if you need to. So in our sales area, of course, the transaction that is created when you ship is where you gather your information for invoicing when you perform get shipments in the AR invoice process. You want to make sure that all the shipments have gone out, they've been recorded in the system, you've captured those in your accounts receivable invoicing process, you've closed the groups. Always please running your edit report before you post the group to close it, and that if you have any other groups for miscellaneous invoices or credit memos, you want to make sure all those groups have been closed. Likewise, you want to make sure all your cash receipts groups have been recorded and posted. And I made a note here in blue about the necessity of write-off adjustments. If you kind of want to clean up your accounts receivable aging at year end, what I would recommend is take a look at those things that are small dollar amounts that are over 30, 60 days, and just ask yourself, am I going to recoup or recover this money from my customer? What did they take a deduction they shouldn't have taken and we're not getting it back? Those types of things. but now would be the time to do any of those necessary adjustments, and that's through the system, and it's actually called write-off adjustments or AR adjustments. So the standard things that all you accounting types know would be to reconcile your aging, and you want it to balance with your AR trade account. And all the other types of, if you do advance billing or you use deposit accounts, you want to, make sure that all those things are in good order as well. One note to make on the subsidiary ledgers, in this case being the aged receivable report, and tying that to your AR account in the general ledger, they should tie out perfectly, and sometimes they don't if somebody's made a manual entry directly to the general ledger account for accounts receivable. That's something that you want to avoid doing because that will make your reconciliation off. I've seen people do it, but if you notice with some of the journals in Epicor, they'll say that they're system accounts, accounts receivable, accounts payable. Those are considered system accounts, and what is meant by that is we normally wouldn't make a journal entry, a general ledger journal entry to those types of accounts. So you want to look for that if you're not balancing to your subsidiary ledger. Take a look and see if anybody's made some manual journal entries. Your salespeople, sales manager, executives, accounting person, after the captures run, you probably want to take a look at your sales gross margin report, and you can compare it to last year. How does it compare? Is it reasonable? You want to check for anything that's glaringly obvious. There just may be some things that don't look right, so it's worth taking a look and making sure that it makes sense. And some of you may use this a lot. Some of the others may only use it occasionally, but it's something that you want to take a look at. So moving along to the purchase and payable side of your business, just like the AR side, you want to verify that you've received in all the purchase orders, that you show those on your received not invoiced report, and once you go ahead and do your AP invoicing and add receipt billing line, that will clear off of the received not invoiced report. You want to make sure that all your groups are posted and that you have any advance payment invoices or debit memos, miscellaneous, etc., that those have all been posted. And when I say all been posted, I'm talking about the groups that you create in AP invoicing and an AP payment entry. If you have any manual checks and adjustments that you need to record and post, make sure that that's completed. And then, of course, once again, you want to reconcile the AP account with your age payables report. And that's going to bring us to our general ledger. And this is where, it's kind of like the buck stops here. You've run your capture process and you've got it as of the last fiscal period for the year, and all reports and reconciliations have been completed. You're feeling comfortable with that. Excuse me. And you might have some final manual journal entries or recurring journal entries that you make every period, things like payroll accruals or allowance for bad debt. You may have your depreciation, that's a common entry for you, and those types of things. And once you have all of the general ledger entries done and posted and completed, and you make sure that even if you use Epicor for a bank reconciliation, that that's been completed and posted, then you can go ahead and close the final fiscal period. And like I said, that in this case is 12/31. You'll print your trial balance and take a look at that, make sure everything looks good, and then you print your financial report. So when you close your fiscal period and year, I have seen where some people have actually forgotten this step, but when you're comfortable and you're closing the last period, you want to make sure that you go ahead and transfer your balances to the next year after the closing and run the transfer opening balances. So if you look at my screen print here, it shows transfer current to next. I'm working with my main book, and it says from 2017 to 2018. Of course, for this year end, it would be 2018 to 2019. And this will transfer all your balances for the upcoming year effective January 1. You'll close out your expense and your revenue to retained earnings, and then you'll be good to go the 1st of January. So what are some common pitfalls? Like I said, there could be any number of things that go awry, but these are some of the most common ones that I run into. One thing is when you're doing a cash transaction, sometimes it gets posted to the wrong bank account if you have several bank accounts. So I've heard in the past where people say, oh, that went to my payroll account and it was supposed to go to my general checking account or my operations account. And so that can create a few problems. On posted groups, we've already mentioned that. Backdating, you don't want to do any backdating, so please have the people that are in the production area, shipping and receiving, if you do inspecting, throughout your business, it needs to be known that on the last day of the year, there will be no more processing of anything after a certain time to be determined by you. And we want to make sure that we get all our revenue and expense items recorded in the proper period, and that might entail doing the proper accrual. We don't want anything future dated either, so just make sure that things are in the correct time period. And with that, I'm going to turn things back to Mr. Steve Burns.
Great, thanks. Linda, we certainly appreciate the insight as always. So, back to my screen. Linda, there's a couple questions that came up. One of them was, how long can I leave period 12 open?
Well, the short answer is you can leave it open as long as you like. Epicor is very forgiving when it comes to opening and closing periods. You can leave periods open. You can leave the year end open. However, I wouldn't suggest that would be a best practice.
Okay.
I would go ahead and, close it as soon as you possibly can.
I know a lot of our customers ask this same question. Once the year is closed, can it be reopened?
Yes, again, flexibility within Epicor. You can reopen the period, as a lot of organizations need to do. They have auditors come in saying January, February, and they have closed out the year, but they need to add some adjusting journal entries. And so, yes, you certainly can reopen and go ahead and post those entries.
Now, is there an impact on prior periods if a closed year is reopened?
There's no impact on prior periods, except maybe period 12, depending on if you use 12 periods or if you add a 13th period for adjustments. But keep in mind that if you make some adjusting entries, that is probably going to impact your retained earnings, and it's not going to go back to prior periods unless you date it back to prior periods. But you just want to know that you're going to have to rerun your financial statements.
You know, you had a slide that had some pitfalls to watch out for. So of those, what are the more common?
Probably the most common one I've seen is where somebody runs the capture cost of sales WIP procedure, they post to the general ledger, and then something doesn't balance. And typically, what you can do as a safety on that is go back to your inventory with reconciliation report. Maybe somebody came in on a second or third shift and did some transacting. So run it for non-posted to general ledger. I'm talking about the inventory with reconciliation report. That's a mouthful. Run it for non-posted, and lo and behold, sometimes you're going to see that somebody ran some more transactions. You're going to have to go ahead and capture that and post it.
Excellent. Linda, I want to thank you. It's always a pleasure to hear your insight and your experience. I want to thank everybody for joining us today. We hope you enjoyed today's webinar and gleaned some insight from it. Also, I wanted to let everybody know that this session is being recorded and be available for download from our website. It'll also be posted up on our YouTube channel. So please join us for our next webinar coming up on Wednesday, January 16th in 2019. We're already into the new year, when we'll give an overview of coparts in Epicor ERP. You can register for the upcoming webinar or any upcoming webinar on our website at www.crawford-software.com, or just look for an upcoming email invitation. So on that note, I want to thank Linda, thank everybody that joined, and have a great day and a happy holiday season from all of us at Crawford Software.
Thank you.